Hello, in this video you will learn 3 steps of the IAS 36 impairment test with short numerical example, and by the end of this video you will know how to determine the recoverable amount and how to calculate impairment loss. I am Sylvia of CPD Box, the website with loads of IFRS checklists, Excel files, explanations, and more. So check that out if you need practical knowledge of IFRS. So let's firstly recap the basic rule of IAS 36. An asset is impaired when its carrying amount exceeds or is greater than its recoverable amount. Carrying amount is what you find in your accounting record or in the financial statements. Recoverable amount is higher of assets fair value less cost of disposal and value in use. So if this is the case, then the difference between the carrying amount and recoverable amount is impairment loss. And that's the very basic theory we're using to perform impairment tests. So let's illustrate it on a numerical example. So we have this case. A car rental company owns a limousine, but due to lockdowns in the area, rental revenues from limousine sharply declined. So it's a hint for you because we have a clear external impairment indicator here, the sharp decline in revenues. And here we have a few financial information. Carrying amount was 240 currency units. Estimated net cash flows 50 currency units per year in the next 5 years, including proceeds from the sale of limousine at the end of the year 5. Pre-tax market interest rate is 3%, and similar limousine in the similar conditions sells for 200 currency units on the market, and commission to sell the limousine is 2%. Now the question is the limousine impaired? Well, let's perform the impairment test in 3 steps based on this information. So first, let me again remind you the basic rules. We are comparing carrying amount with recoverable amount. For carrying amount, you just look to the accounting records, and in the example, it was 240 currency units, so we just bring the number here. Now, let's test. Step number 1 is to calculate fair value less cost of disposal. So let me bring in the relevant data from our example. Similar limousine in the similar conditions sells for 200 on the market. So this would be the fair value of the limousine at the time of doing this test. And commission to sell the limousine is 2%, and this is the cost of disposal because you pay this commission only when you sell. And therefore, the fair value less cost of disposal is 200, which is fair value, less 2% of 200, which is the cost, and it gives us 196, which is 200 less 4. The step number 2 is to determine value in use, which is the present value of estimated future cash flows expected to arise from continuing use of an asset and from its disposal at the end of its useful life. This is the definition from IAS 36. You will see this in a second in the example, but first let's bring in the relevant data from the case. We have these estimated net cash flows of 50 currency units per year in the next 5 years. So in this case, the cash flows are the same each year, and pre-tax market interest rate is 3%, and we will use this as our discount rate. So here we can calculate the value in use using this formula, but be careful because you can use this formula only if the cash flows are the same every year, which is mostly not the case. So let me show you the calculation in Excel that you can use anytime for any set of cash flows. So here I set up a simple table. The first column is the year from now or from the time of testing, 1 to 5. The second column is net cash flows in the individual years, so it is 50 each year. But of course, in the real life, this requires careful analysis of what to include, what to exclude, put all the expenses and revenues from that assets or cash generating units, etc. I teach all of this in the IFRS kit with many more examples, twists, and tricks, so check that out if you're interested. Then we need to discount these cash flows with our pre-tax rate of 3%. And we can calculate the discount factor using this formula, where R is the rate of 3% here and N is the relevant year. So let me put this formula here. The present value of the individual cash flows is then the cash flows multiplied with the discount factor. And the total net present value of cash flows is the sum of the present values, which gives us about 229. Of course, this is the approximate method because it assumes that all the cash flows happen at the year end, which is not true in general. So if you need more exact calculation, then you need to do a bit of analysis, but this is the basic calculation. Let's bring this to our example. So the value in use is 229. The step number 3 is to calculate recoverable amount and then the impairment loss. So we know already that recoverable amount is higher of fair value less cost of disposal, which is 196, and value in use, which is 229. So the recoverable amount is 229, and this is the value in use. Let me remind you the carrying amount, which was 240, just taken from the books. And so the impairment loss is calculated as the carrying amount less recoverable amount, value in use in this case, which is 240 less 229. This gives us 11. So this is the impairment loss. Now let me show you how to reflect this loss in the financial statements. If you apply the cost model to the asset, then the entry is debiting the profit or loss expenses for impairment of assets, which is 11, and crediting the assets in the balance sheet, probably some adjustment account with 11. Now, if the asset is under revaluation model, you would adjust the revaluation surplus in equity first. So you would bring down this surplus to 0 and only then book the rest in profit or loss. And don't forget to adjust the depreciation charge in the next year because you have new carrying amount of 229, not 240 as prior to testing. So this was the simple walkthrough of IAS 36 example. If you want much more than this, not only in impairment, but also in the other IFRS areas, including checklists, Excel files, practical examples, go to my website, cpdbox.com, and sign up to my free newsletter. And of course, if you found this video useful, please hit the like button and subscribe to support my work. Thank you. Bye.